Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at MLC, and I'm joined by our Senior Economist Bob Cunneen. Welcome, Bob.
Thanks, Sinead.
Bob, it was a strong month for global share markets in October. Can you tell us what occurred?
So global share markets are up about 2% for October, so that's a good positive return. And two key factors behind that. Firstly, there was a trade truce between America and China. So President Trump announced a phase one agreement, which basically says that neither the US or China will raise tariffs at this stage. And China made some concessions that will increase the purchase of American goods such as soybeans and the like. So that was seen as a key positive, but we haven't had the two parties sign the dotted line. So until that happens, we've got to be a little bit careful and sceptical. The other positive factor was the Federal Reserve lowered interest rates. So the American Central Bank cut interest rates by 0.25%. So that adds to the previous two rate cuts. And for Wall Street, this is particularly positive. So Wall Street has continued its very strong run and is now at record highs.
So you mentioned that we saw the rate cut in the US. We also saw a rate cut in Australia in early October. What are these central banks indicating in terms of future rate moves from here?
For the Federal Reserve, they're a little bit more cautious about committing or giving guidance to further US interest rate cuts. But in the case of the Reserve Bank here, they're more open to cutting interest rates because what they can see is the economy is still soft. Our economic growth is below par. We're very subdued. You can see that in terms of retail spending is very soft. Housing construction is weak, the same with car sales. And from that point of view, even though we've got a rise in house prices and employment is still reasonably solid, the economy still needs support. So hence the Reserve Bank is open to cutting interest rates.
Okay, and yet we saw global government bond yields move higher in October, indicating that the market thinks the prospects for the global economy are improving from a low base. What do you think about that?
Well, again, those two factors, the trade truce and the American Central Bank cutting interest rates, were seen as supportive of the global economy. So some bond investors are seeing maybe there's green shoots for the global economy. There's also some pressure on central banks to say that's enough, we've done enough in terms of interest rates, and there's now more pressure on governments to increase their spending or consider tax cuts to strengthen economic growth. And if that's the case, then bond yields will move higher because more fiscal stimulus means more government bonds on issue and therefore higher yields.
What about the Australian share market? How did that do in the last couple of weeks?
The Australian share market was slightly disappointing. We actually fell 0.4%, which is a marginal decline, but we had the positives of the Reserve Bank cutting interest rates, but against that, some of the sectors disappointed. And in particular, bank shares, they were down about 2.5%. There was concerns that with lower interest rates, the banks would see lower interest margins and therefore lower profits in the future. So that was a key concern there. There's also concerns about our IT sector. It weakened. There was some doubts about the corporate profitability of some of the shares in that sector. So our market was basically a disappointment in October.
Thanks for your time, Bob.
Thank you very much, Sinead.
And thank you for joining us.